From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 2nd, 2017. Today, we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar. Before we begin looking at the chart, it's important for us to take a look at some fundamentals that have happened this week for the New Zealand USD. Earlier this week, we had some unemployment information, employment change information out of New Zealand. What's important to note there is the unemployment rate went up. It was forecasted 4.8%, came out at 5.2%. So higher unemployment, not really great news for New Zealand. Then on Wednesday, we get the ADP non-farm out of the US, came out much better. For the U.S., it was forecast 165,000, came out 246,000. So that kind of foreshadows what we might look for tomorrow with non-farm payrolls for the U.S., which is all good news if that continues to look in that direction. So poor news for the New Zealand that with that unemployment rate. Good news for the U.S. typically would cause this currency pair to go down. That's the way that those fundamentals should react here on this currency pair. So let's think about that. Obviously, short-term trend, let's talk about the black trend line on the far right-hand side. We've been in an uptrend, the shorter black trend line. Uptrend, Forex Black Book at the bottom is green. That implies a bullish trend as well. A couple other things I want to point out here on the daily time frame. Blue trend line. We've looked at this in the trade room a couple of times this week. If you look along the blue trend line, longer blue trend line, very bottom, blue circle. That's the lowest low. In the middle of that trend line, there's a blue circle where it touched that blue trend line again. And up here towards the top, there's another blue circle. So 3 times, 1, 2, 3 times into that blue trend line on the top side of it. Then finally, it broke underneath it. And then the red circle shows us where it came up and used that trend line as resistance around the 100 period moving average. But right there underneath that blue trend line at the red circle, went back down. And then of course, over the past couple of months, we've been in the uptrend along the black trend line. So we have the blue trend line, the black trend line, and once again, not only did back here where the red circle is, it tested that blue trend line, here we are again, testing there again. One more thing, the red trend line coming down from the top, touching the highest high at the top of the chart. Right here where this black circle is, it touches that red trend line, and here we are again. So really, we're having this convergence of trend lines here. The rising black trend line, the falling red trend line, the rising blue trend line, all converging right here in the mid 7300s. Okay, so that's the first thing that I wanted to point out. Let's zoom it in a little bit here on the chart. And a couple of other things let's take note of. Let's draw some Fibonacci on the chart. Let's take Fibonacci from the highest high, top of the red trend line, down to the lowest low you see. So highest high down to the lowest low. That's important because that puts the 786 Fibonacci retracement level at 7351. Guess where that is? Right there at our pink shaded area where that convergence of those 3 trend lines is coming into play. Right there. So that's one Fibonacci. Second Fibonacci, let's take it and draw it from where the black circle is, that high, down to the same lowest low. So from the black circle high down to the lowest low, that now puts the 886 Fib right at 7341, right smack in the middle of our pink shade area. So highest high to lowest low, mid high, the black circle down to the lowest low puts 786, 886 Fib right there at the pink zone where our trend lines are converging. You look back along that pink shaded area, you see resistance back here along there. So we know historically the market has found resistance here. That's a historic fact. We know there's trend lines lining up here into this pink shaded area, and we know that there's Fibonacci here. All of that providing this brick wall, this barrier in the market right around the 7330, 7350 level highlighted in the pink shaded area. Earlier this week, we actually looked at a harmonic pattern. There was a bearish harmonic pattern lining up right there with the pink shaded area as well, and even traded it in the live trade room earlier this week and made some profit as it went back down. So that became a profitable scenario. So lots of things converging here at the pink zone. All of that telling me with the fundamentals we just discussed about the jobs news out, the unemployment rate out of New Zealand, ADP being better, non-farm being tomorrow, and maybe being better because of ADP. all of that to me points to looking at this as a barrier of resistance and a point of potential reversal. Now, I know the trend has been up. That's not too hard to see. But if we're looking for a point of reversal, this becomes it. If anything, what this should tell you is this is not a great place to go long and buy. Buying underneath the 73.30.50 level is what I think appears to be dangerous because it's into a resistance level. So not a good place to buy it. I think it's becoming a better place to potentially go short. Zoom it in one more time, and you can see it lining up right there into that area. There's a couple of days where it touched it, fell down. Here we are coming back up a second time. Maybe a double top possibility here into the pink shaded area. Now, all of that changes. Well, maybe not completely changes. I mean, we look back here where the black circle is. It spiked the blue zone, and then that was a reversal. So it could be the blue shaded area up there that becomes the reversal point as well. But all in all, what we're looking at is this area between maybe the mid 73s and the 74 level as a potential reversal point. Not a great place, in my opinion, to go long. If we were going to go long based on the current black trend line and the green trend bar Forex Black Book, we needed to go down and get away from this big brick wall that's sitting in the market. Let's take it down to the 4-hour time frame. There it is again. There's the pink shaded area. There's the Fibonacci's. There's the trend line sitting in there. So again, I believe that this becomes an area to look for today. Intraday resistance and reversal, and maybe tomorrow if we get those positive jobs numbers out of the U.S. like ADP foreshadows, then maybe we'll look for some more profit on the way back down for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.